Be Wealthy and Smart, episode 991.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why you want to hold steady through this volatility. We've been talking about this for several of the last episodes now. We've had some volatility up and down. We've been testing the lows several times, but basically we've come down to the same point. Although it feels like the market just wants to continue to go down, that's not actually what the chart is showing us. We're going up and then we're coming back down. But here's the thing. There's a lot of drama in the news right now. There's a lot of drum beating about potential war or sanctions. There's Russia and Ukraine that's in the news. There's a lot of bigger picture international news happening. And sometimes that can scare us because we think that that matters to our stocks. And the reality is it really doesn't. It can short term and it can cause fear short term. But it really isn't what's going to dictate the future of the stock market. Because really what drives the value of stocks is their earnings. It's how much are people spending? And what's the profitability of companies? How's their bottom line doing? Those types of questions are much more important than are we going to put sanctions on Russia? Not that that's not important in our lives, it is, but I'm just talking about in reference to stocks and the direction of the stock market. Now, it might temporarily cause some fear to come into the market, but we have been through so much more. We've been through 9/11. We've been through a huge real estate crash. We've been through all kinds of scares in the past. Some of them more justified than others, and some of them last longer than others. But the point is really, it shouldn't be dictating what you do with your investments or how you make your investment decisions. It's more important to look at what is the time frame that you're investing for. And if it's long term, then you don't want to worry about these short-term gyrations. You also want to look at what is the reason that you're investing. If it's for long-term appreciation, well, the stock market is one of the best places for that, and the crypto markets are much better places for that. Even with the recent pullbacks, these are still some of the best places to compound your money. So while in the news we're hearing all about interest rates, will they go up, won't they go up, what's the Fed going to do? There's all this confusion which is causing this back and forth volatility in the market, which will work itself out. And we're seeing that all that jawboning talked interest rates up only to have the Fed say, well, maybe we don't quite need to raise interest rates yet, maybe in March. But then if the consumer gets a little bit weaker, then they won't really need to raise interest rates in March, perhaps. So then we can see interest rates trend down, which is bullish for the market. And I do expect we're going to see some bullish justification like that come into the market very soon because we are at a very oversold place and we are at a place of maximum fear right now. And I do think that we saw capitulation last week when the market was down 1,000 points and then turned. We also have good news coming this spring, which I'm still going to stand by my forecast that things are going to get better with the pandemic. And already we saw a few days ago San Francisco talk about changing their mask mandate and softening their mask mandate rules as of February 1st. So that's happening in the San Francisco area. We have other areas following. And I think we're going to start seeing things get better in that regard. A Economies are going to fully open up again. People are going to start traveling again in the springtime. So what I think is the best strategy right now is just to hold steady or buy the bargains of the growth areas that have been doing well and I think will continue to do well. A lot of people think that we have done a full rotation into value stocks, which are boring, out of favor, slow growth, dividend-paying stocks, and they think that technology stocks are over. I couldn't disagree more. We had that rotation. I think we're going back into technology. We're going back into high growth areas because as interest rates come down, that's going to allow those companies to do well again, and they're going to be the leaders once again. So this is the perfect time to pick up bargains in those leaders from last year and the areas that we think are high growth coming up. Now with silver, we were off to the races with a quick 10% jump up in prices over about a week, and then they've sold back down to where they started. But I think silver is about to wake up. But nonetheless, I don't want you to look at the short term for silver, but this is going to be a dramatic year on the upside for silver. We have some changes in regulations coming up in mid-February that I think are going to be very positive for the situation that silver finds itself in, which is that it is overly shorted. It's overly shorted by the banks to hold the price of silver down so it does not compete with paper money. Silver can be manipulated and held down by having dramatic short positions against silver. And that's what we've found, and that's what many experts in the silver markets have reported. Not only the spoofing that banks got fined for, which is faking the price of silver, but also there are massive silver shorts. Once this new law comes into effect in mid-February, it may impact those silver shorts and may not allow them to short as much as they have. And some of those positions getting sold out could cause a dramatic rise in silver. And this is specifically a rule I'm referencing that the DTCC rule change has happened where hedge funds have to reduce their positions or be sold out, which comes into effect on February 14th. So here's the thought I want to leave you with. Some people are getting very down in the dumps, feeling very depressed, very frustrated to see their accounts go down. We're not used to that. Now, while we've gotten a little bit spoiled, because these things used to happen at least once a year, because 10% corrections are regular occurrences in normal markets, because we had all of that Fed easing and stimulus, we had a pretty long period of time where we really didn't have this big of a correction. But here's what I want you to know. This too shall pass, and we're almost through it. And I see really good news ahead coming up that is going to cause the market to make up all of these losses, in my opinion. Now, I can't guarantee that, but I really truly believe that we are going to go back, make up for these losses, and go beyond. So your account is about to look a lot better, but it's going to take some time. And all we need to do is have some patience, hang in there, not make any dramatic changes to the portfolio that we're going to regret, but pick up some bargains because that's the time that you can make extra money when the market goes up from being smart and buying when others are fearful. So we have interest rates moving in the right direction. So as they say, have diamond hands. That means don't sell and hang on for dear life or hodl. In the crypto markets, that's what they say. And speaking of crypto, I think we're about to have some really good months in February and March in the cryptocurrency markets. We've had a sharp pullback. That too has been frightening and extreme. But what I know is when we have pullbacks like that, it's right before the market reverses and goes a lot higher. So I'm very, very excited because I think February and March, we're going to see some really great news in crypto markets. And I also think things are going to get better in stocks. So hang in there and hold steady. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button. And if you want to learn more about crypto, check out my new book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. There's a link in the show notes that'll take you to Amazon. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.